Practice section. Inaction is the riskiest response to the uncertainties of an economic crisis, but rash or scattershot action can be nearly as damaging. Rising anxiety, how much worse are things likely to get, how long is this going to last, and the growing pressure to do something often produces a variety of uncoordinated moves that target the wrong problem or overshoot the right one. A disorganized response can also generate a sense of panic in an organization, and that will distract people from seeing something crucially important: the hidden but significant opportunities nestled among the bad economic news. We offer here a rapid but measured approach, simultaneously defensive and offensive, to tackling the challenges posed by a downturn. Many companies are already engaged in some kind of exercise like this. Certainly every organization with an institutional pulse has held discussions focusing on what it should do about the current economic crisis. We hope this article will help you move from what may have been ad hoc conversations and initiatives to a carefully thought-out plan. The merits of a comprehensive and aggressive approach are borne out in research by the Boston Consulting Group, which indicates that companies whose early responses to a downturn are tentative, for example, modest belt-tightening, typically overreact later on, say cutting costs more than they ultimately need to. This results in an expensive recovery for the company when the economy rebounds. Our approach has two main objectives from which a series of action items devolves. First, stabilize your business, protecting it from downside risk and ensuring that it has the liquidity necessary to weather the crisis. Then, and only then, can you identify ways to capitalize on the downturn in the longer term, partly by exploiting the mistakes of less savvy rivals. For some companies, the outcome of this process will be a program of immediate actions that represent a turbocharged version of business as usual. For others, it will be a painful realization that nothing short of an urgent corporate turnaround will suffice. What is your exposure? The first step for a company to take in a challenging economic environment, especially one that could significantly worsen, is to assess in a systematic manner its own vulnerabilities at the company level and by business unit. Consider several scenarios. As an economic crisis evolves, sketch out at least 3 scenarios: a modest downturn, a more severe recession, and a full-blown depression, as defined by both duration and severity. Consider which scenario is most likely to unfold in your industry and your business based on available data and analysis. There was evidence from the beginning, for example, that the current global downturn truly stands apart. Early on, banking losses had outstripped those of recent financial disasters, including the United States savings and loan crisis, 1986 to 1995, the Japanese banking crisis, 1990 to 1999, and the Asian financial crisis, 1998 to 1999. Furthermore, as the economy first began to stall, the underlying problem of consumer and corporate indebtedness — in the United States, it totaled about 380% of GDP, nearly 2.5 times the level at the beginning of the Great Depression — pointed to a prolonged period of economic pain. Next, determine the ways in which each of the scenarios might affect your business. How would consumers' limited capacity to borrow reduce demand for your products? Will job insecurity and deflating asset prices make even the credit-worthy increasingly reluctant to take on more debt? Will reduced demand affect your ability to secure short-term financing, or will weak stock markets make it difficult to raise equity? Even if you are able to tap the debt and equity markets, will higher borrowing costs and return requirements raise your cost of capital? Quantify the impact on your business. Run simulations for each of these scenarios that generate financial outcomes on the basis of major variables, including sales volume, prices, and variable costs. Be sure to confront head-on what you see as the worst case.